most people never see it coming. It's silent, almost invisible, and it slowly rearranges your entire life without ever asking for permission. You feel it every time you walk into a grocery store, every time your rent goes up, every time your paycheck seems to stretch just a little less than it used to. And yet, no one hands you an explanation. No one tells you why the same money that once felt secure now feels fragile. The truth is simple, and it's far more uncomfortable than most people in power would ever dare to admit. Our money is losing value, and it's happening faster than you think. The real crash isn't the one you see on the news with frantic traders and falling stock charts. It's the one happening inside your wallet, quietly draining your financial power one drop at a time. This isn't the story of a sudden collapse. It's the story of a slow-motion erosion that has been building for decades. And once you understand the forces behind it, the hidden mechanisms, the incentives, the traps, you may never look at money the same way again. If you think inflation is just prices going up, you're only seeing the tip of the iceberg. Inflation isn't just about prices. It's about your purchasing power leaking out like air from a punctured tire. You still work, but you have to work harder. You still move forward, but slower. And somehow, despite all your efforts, you feel like you're just treading water, staying in the same place. This didn't happen overnight. It's the result of decisions made long before most of us were even born, a chain reaction set in motion when governments discovered something incredibly powerful. People really dawn like paying taxes, but they barely notice when their currency quietly loses a little bit of its value every single year. And so, inflation became the invisible tax of the modern world. It's the one tax nobody votes for, but everyone pays. Think about it. Every great empire in history has used this trick. Ancient Rome did it by mixing cheaper metals into its silver coins, devaluing the currency. European monarchies did it by physically shaving the edges off gold pieces. And today, governments and central banks do it digitally, creating new money with a simple keystroke. The method has evolved, but the strategy is exactly the same. Expand the money supply and dilute the value of what's already out there. But here's the part that nobody explains on the evening news. Inflation does unaffect everyone equally. If you own assets, things like real estate, stocks, or businesses, you often benefit. As the value of money goes down, the price of the things you own goes up. But if you depend on a salary, your savings, or a fixed income like a pension, you get squeezed. It's a quiet, invisible redistribution of wealth, flowing from those who earn money to those who already own assets. And that's a big reason why it feels like the cost of living is rising much faster than your income. Because for many people, in many countries, it actually is. You've probably noticed it yourself in subtle ways. Groceries aren't just more expensive. Sometimes the packages get smaller while the price stays the same. That shrinkflation show. Your rent doesn't just go up because your landlord wants more money, but because housing has become one of the world's favorite shelters against inflation. Even your morning coffee has become a symbol of this hidden crash. Same cup, same routine, but each year, a little more of your paycheck disappears into it. But the real twist, the real hidden cost, is this. Inflation isn't just about the price of goods. It's about the value of your time. Imagine this for a second. 20 years ago, the average person exchanged 1 hour of their labor for a certain amount of money. With that money, they could buy a full basket of essentials and maybe have a little left over. Today, that very same hour of your life buys you significantly less. It's not because you suddenly became less productive or less valuable. It's because the money you're paid in is worth less. You still give 1 hour of your life, but you receive a smaller piece of the world in return. That is the hidden crash. It's not a stock market collapse. It's not a banking crisis. It's the steady, silent shrinking of your economic power wrapped in the illusion of rising numbers. Your salary might look higher on paper. Your bank account might have more digits. But if the cost of everything around you grows even faster, you're not getting richer, you are falling behind. Governments and central banks will often tell you that inflation is under control, or that a little bit of it is actually good for the economy. But how does that square with your lived reality when they measure inflation? They use complex baskets of goods and services that do you and always reflect how ordinary people spend their money. They often include technology items, like smartphones or TVs, that get cheaper over time, which helps pull the overall average down. Meanwhile, the costs that really matter, the non-negotiables, like food, housing, education, and healthcare are often rising far, far faster than the official rate. But here's where the story takes another turn. Inflation isn't just an enemy. For governments and large institutions, it's also a tool. It's a powerful one. It encourages you to spend your money today instead of saving it for tomorrow because you know it will be worth less in the future. It pushes people into debt because you can pay back your loans later with cheaper, less valuable money. And most importantly, when a government accumulates massive amounts of debt, inflation helps to erode that debt away, just like it erodes your savings. In a strange way, your loss becomes their relief. And every time a major crisis hits a recession, a global pandemic, a geopolitical conflict, what's the first solution we always see? Print more money, inject more liquidity, and stimulate the system. It often works to calm things down in the short term, but each time it's done, it leaves the currency a little weaker than it was before. The cost of creating stability today often becomes the cause of instability tomorrow. This is why your money feels like it's losing value faster than ever before. We live in a world that has become addicted to easy solutions and short-term fixes, where the long-term consequences are pushed down the road. And the biggest consequence is this silent crash, this invisible erosion happening right under our noses. But here's the surprising part. This crash isn't just the end of the story. For many, it's the beginning of a massive shift, a global rethinking of what money truly is, what it should be, and how ordinary people can protect themselves from a system that seems designed to slowly drain their wealth. People are starting to ask the right questions. They're looking for alternatives. They're seeking knowledge. And in our next video, we're going to dive deep into that turning point in the moment when everything started to change, but to potentially thrive in spite of it. We'll explore how people are building their own financial lifeboats in this changing world. Something shifted the moment people realized their savings weren't safe. Not from thieves, not from banks, but from the very currency they were stored in. This was the moment the world woke up to a simple, uncomfortable truth. Holding cash isn't security, it's a form of decay. For your grandparents, saving money was a path to safety. They kept it in envelopes, in bank accounts, in piggy banks, and it worked. A dollar saved today was still worth close to $1 10 years later. But for you, that idea feels almost foolish. Save $100 today, and within just a few years, it loses a noticeable chunk of its power. Not because you spent it, but because the system did. This is the psychological break that changed everything. People started looking for alternatives any place where value wouldn't evaporate so quickly. Some turned to real estate, driving prices into the sky. Others turned to stocks, hoping the upward trend could outrun inflation. And many, especially the younger generation, turned to digital assets, not because of hype, but because the traditional system felt rigged against them. But let's pause for a moment and ask, how did we get here? For decades, the global economy relied on a simple foundation: constant growth, growth in production, growth in spending, growth in debt. When that growth slowed, governments lowered interest rates. When that wasn't enough, they printed more money. Eventually, the entire system became dependent on this artificial oxygen. And like any dependency, it comes with consequences. One of those consequences is that every new dollar injected into the economy dilutes the value of all the existing ones. It's not theft in the traditional sense. It's dilution, the silent reduction of your financial strength, while the numbers in your bank account stay exactly the same. And this dilution shows up everywhere. You see it when a house in an average neighborhood suddenly costs more than most people will earn in a decade. You see it when a college degree that once guaranteed a good job now just guarantees debt. You see it when things that used to be normal, owning a home, raising a family, taking a vacation, are slowly turning into luxuries. But here's the biggest twist. Inflation doesn't always look like inflation. Sometimes it looks like opportunity. It looks like booming markets, record-breaking asset prices, and rapidly growing companies. But beneath that shiny surface, the same mechanism is at work. The more money that spreads through the system, the less each unit is worth. This is why it feels like the world is running faster than you can keep up. It's not because you're slow. It's because the treadmill's speed keeps increasing while your energy stays the same. Yet, in the middle of this silent crash, something interesting is happening. People are becoming more aware. They're asking questions that previous generations never had to. Questions like, should a currency be designed to lose value? What actually gives money its meaning? Why do we rely on systems that reward debt more than they reward discipline? This shift in awareness is incredibly powerful. Because once you understand that money is not stable, that it's engineered to decline, you start thinking differently. You stop relying on savings alone. You start learning about investing, about assets, about how to protect your wealth. You realize that financial survival isn't just about working harder, it's about understanding the game. And here's the thing. Once you see the game, you can't unsee it. You begin to notice the patterns. You see how every crisis is followed by stimulus, how stimulus is followed by inflation, and how that inflation is followed by a new round of promises. You see how every solution just creates the next problem. You start recognizing that the system isn't designed to make you poorer, but it is designed to make your money weaker. And that's why you must build strength elsewhere. Some people do it through financial education, some through investing, some through starting their own businesses, and some simply by refusing to ignore the erosion happening right in front of them. Because this hidden crash doesn't destroy those who prepare for it, it destroys those who assume things will just stay the same. The truth is, the world is entering a massive financial transition. We're seeing new technologies, new currencies, and new economic models emerge. And while no one knows exactly what shape the future will take, one thing is certain: understanding the real value of money and how easily that value can slip away is one of the most important skills of our time. This hidden crash isn't just a catastrophe. It's a wake-up call. It's a reminder that money isn't just a tool. It's a system built on trust. And when that trust weakens, so does everything built on top of it. So take a moment to think about your own situation. Think about how inflation has shaped your choices, your dreams, and your daily life. And then ask yourself, what would change if your money worked as hard as you do? What would your future look like if your savings grew instead of shrinking? What could you build if erosion no longer controlled your financial destiny? If this video opened your eyes, even just a little, share your thoughts below. And if you want more stories that reveal how the financial world really works in simple, human language, consider subscribing. There's so much more to uncover.